Hey, welcome back to the Genius Maltby channel. Quick look at today's headlines. We'll do an extemporaneous, non-scripted review of what we're seeing in the news today. It's going to be pretty fast-paced because there is a lot of material. And some of it's review. You know, we see some of the same topics of discussion, some of the same headlines get recirculated, and they kind of come to the surface again, the same old stories. And you'll, most likely, if you've been on this channel for any length of time, you're going to immediately be able to pick out what articles those are. And we'll try to mention it when we get to them, but I'm sure you're going to know even if I mention it or not. But, of course, we've seen this headline before in different forms, but global recovery in danger of stalling. We're seeing that more and more frequently. The world economy is beset by feeble growth and a recovery that is weak, uneven, and in danger of stalling yet again, according to the latest Brookings Institution Financial Times Tracking Index. Now, I heard this on NPR this morning, went ahead and pulled some of the headlines. We'll go through just a brief part of the article. But Obama and the Fed Chairman, Janet Yellen, they had a meeting very recently. I believe it was this morning or last night. According to ABC News, when I pulled this, it was 21 hours ago. But Yellen and Obama had a meeting. And, of course, as you'll see here, it was a private meeting. But they did trickle out the need to know, because you're on a need-to-know basis, and none of us need to know anything, so that we have to believe whatever they tell us. There's probably no minutes recorded. You're not going to see any of the dialogue. But Obama and Yellen talked about the state of the labor market, inequality, and potential risks. I really don't need them to talk about inequality, but they apparently discussed potential risks. And both in the U.S. and globally, they reviewed steps taken during the Obama administration to strengthen the financial system and protect consumers, the White House said of the private meeting. Of course, that's what the White House wants you to think took place in the meeting, because Obama did so much to heal and make us recover. Well, we just saw a headline that says the recovery is in danger of not happening. Many could argue that there has been no recovery. It's been a whole charade, smoke and mirrors, and at what cost are we at this point? Now, again, let's return to the reading this here. White House spokesman Josh Earnest said both Obama and Yellen are focused on ways to expand economic opportunities for the U.S. middle class. Earnest called the meeting an opportunity for the two to trade notes, while emphasizing that Yellen makes decisions about monetary policy independently. Now, I tend to not believe everything that I read, and especially here what we're told when it comes from the speaker boxes of the media, and information that is controlled to be released by the state is typically never to be trusted. I have a theory, and I think that they had this meeting because of the previous headline. I think they both know there is something wrong. We've seen concern in Yellen's tone lately. They've halted further raising of the interest rates as of late. And I think that all indicates and points to the stalling of the economy. And they know something's wrong, and they're having meetings about it. That's why the meetings are private. If you got nothing to hide, you would just be out in the open with it. So, of course, it was private. And I think this meeting and potentially could raise, it causes concern. I think they had this meeting because of the previous headline and because the economy is in an unhealthy state, and we'll see further evidence of that. As we've seen evidence of that throughout the last several weeks. Just pull up some of the old videos, look at some of the old headlines, and you'll see things are not as good as they appear to be, or as they want you to believe they are. For example, U.S. wholesale inventories fall sharply, point to weaker growth. Washington, April 8th, Reuters, U.S. wholesale inventories fell at their fastest pace in nearly 3 years in February, pointing to a sharper slowdown in first quarter economic growth than previously thought. U.S. braces for worst earnings season since 2009 crisis. And here's a chart that points to that. Deeper in earnings recession. First quarter results set to show the biggest quarterly drop in U.S. profits since 2009. And if you look at that there, we have had some pretty significant drops for the last several quarters. And if you look at starting all the way back at about the second quarter of 2015, it looks like that there has been some quarterly drops in U.S. profits, 4 in a row now for the last year. Further evidence that we are potentially heading into a recession. U.S. corporate profits are expected to drop the most in 6.5 years in the first quarter, led by a wipeout in the embattled energy sector. Earnings for companies in the Standard & Poor's 500 index will fall 9.8% year over year, which would be the sharpest decline since the third quarter of 2009 and a fourth consecutive quarter of contraction according to Bloomberg data. Results will be insufficient to justify current stock valuations, says Alex Bellefleur, head of global macro strategy and research at Pavilion Global Markets. This slowdown, this economic stall, these meetings with Yellen and Obama, the hesitation we've seen with the United States Federal Reserve, might be some of the reasons we're going to get to some of these next articles. Now, these are the ones I talked about that are the ones the themes that tend to be recycled, tend to come to the surface at certain times of the year. And here it is, Germany's gold repatriation program resurfaced yet again. I've made numerous videos on this very topic. You'll see it mentioned time and time again. Well, it just popped up in the news again. Now, it's the same old material, so we're not going to go into a whole lot of detail on it. Germany leads central bank gold repatriation movement. Germany and others are requesting the gold held on deposit in foreign central banks to be returned to where the nations that own them. Long story short, countries that have gold placed elsewhere for security purposes during the Cold War now want all of their gold back. They want to hold their physical gold. Physical gold is becoming more and more demand. I just saw an interview earlier with a gentleman by the name of Epstein, and he was on a financial news network online speaking, and he said basically with ETFs and all of these other packages and vehicles for gold, the physical gold is becoming where it's at. People are now becoming only satisfied if they have physical gold or have the ability to get it delivered upon demand immediately. I think people and investors have been burned time and time again, and it's very easy to see the ability of individuals to be dishonest and sell more gold than they actually physically have. And that is why the demand for physical is growing and becoming more and more common, from the littlest investor all the way up to central banks and nation states. Just a few other nations that are also following Germany in this are Belgium, the Netherlands, and Austria, all following Germany's gold repatriation lead. There's no substitute for physical bullion, as we just discussed. With global economic and political uncertainty, the central banks engaging in multi-trillion-dollar stimulus programs and instituting negative interest rates, it seems that while diversification is important, having physical gold bullion under one's direct control is a prudent move for individuals and central banks. Again, this theme is being repeated in all corners of the financial news media, coming from individuals of all different walks. Now, not only is gold seeing more demand, and it had a very good quarter this last go-around, but silver just recently, very recently, as in yesterday and today, surging 8% over the last 6 days. But these last 48 hours have been pretty incredible, and we're seeing silver blow past now $16 an ounce when it was under $15 just recently. The silver bullion price is surging 3.65% yesterday. They've surged again 8% in 6 trading days. Silver rose 56 cents from $15.34 to $15.90 per ounce yesterday, made further gains in the Asian and early European trading markets, and broke above the psychological resistance of $16 an ounce. Now, what this means for silver, anybody's guess. Silver could continue chugging on ahead, and I know this is going to make a lot of you silver stackers happy, because a lot of you guys have been calling this for quite some time, how suppressed and how low silver's been, what a deal it has been. You know, I went ahead and purchased some silver this year just because the prices were so palatable, and that's where I came up with getting some of those nice buttons from Scottsdale Mint. Good buy there, and it was a very, very good price at the time for silver. Now we're also seeing HSBC come out and say buy gold. They as well see what's happening. HSBC technical analysts very bullish on gold. The US dollar price of gold is in an uptrend with a bullish Elliott wave structure, said Murray Gunn, HSBC's head of technical analysis. With the momentum turning up, we open a long position at spot reference of $12.60 an ounce. A stop loss is set at $1,200 with an initial target of $1,500. Gold was trading around $12.61 an ounce on Tuesday morning. Another recycle article headline theme we've seen continuing over the course of the last several years. Russia continuing to add tons of gold to the nation's bullion reserves to help offset billions of dollars in losses from foreign currency buying. Russia continues to add tons of gold to its bullion reserves, making the stockpile the 6th largest in the world. Economists are reporting that gold accounts for 15% of Russia's overall reserves. Russia has used 13 months of steady gold buying to push the value of its gold reserves to over $380 billion, marked for the first time since January of 2015. Bloomberg News reports that the value of Russia's gold holdings are up more than 7% since late July of 2015, when the Bank of Russia, headed by economist Elvira Nabiullina, suspended foreign currency purchases. The Bank of Russia reportedly exhausted 20% of its existing gold reserves in 2014 in an attempt to bolster the nation's ruble-based currency. And here's some charts to go along with that gold fever. Russian reserves growing without currency purchased by central bank. There's the chart there. You can see Russian foreign exchange and gold reserves is the blue line, and then gold spot is right there in the white line, gold spot price. And here as well, more precious. Bank of Russia increasing its bullion purchases month over month. You can see it just increasing there. That's the millions of troy ounces. All of this coinciding with the theme that gold has the best quarter in 3 decades. Prices rising more than in any period since 1986. So what are we seeing here? We're seeing incredible gold futures, up $161 year to date. A little more than that now. We're seeing major players, major states, nations, hedge funds, all pointing to gold as being the asset, the go-to asset to preserve and protect one's wealth, going into what is becoming an agreed-upon situation, which is a stall in the global economy, a slowdown, and a possible coming recession. Not to mention the other worst-case scenarios we discuss on this channel quite frequently, and that is, currency collapse, currency crisis that could be coming with the U.S. dollar, but also a complete implosion with some of the major other markets out there, the bailout bubble finally bursting, and just the dissolving of Western capital because of the cancerous debt that seems to be eating away at the wealth of everyone. So, wraps it up for today. Keep stacking. You're doing well. If you're buying gold, you're buying silver, and you're avoiding debt, you are doing better than 99.9% of all other people out there. That's all I can do is further encourage all listeners and viewers and those who participate here in this small, humble, and benign little community, the Junius Maltby channel, the Junius Maltby project. If you guys are doing that, if you're avoiding debt on a regular basis, if you're cutting back on the frivolous things, and you're stacking metals right now, you're doing well and you're going to have a comfortable future. End of story. So thanks for being part of the channel. Pop comments below. Keep liking, sharing, subscribing, and keep participating and coming back. And don't forget to dig into the archives. There should be 250 videos, a lot of them still very relevant, some good topics to review. If you're new to the channel, go dive into the archives there and spend a couple hours watching some of the most boring videos on YouTube, as we like to term them. Thanks for being here.